War, high-stakes betting, and, well, massive profits. Today, we're going to break down the 2026 Iran crisis. It was a geopolitical firestorm that didn't just shake the global economy, it also put a huge spotlight on the, let's say, shadowy world of prediction markets. Okay, let's get right into it.
So everything really kicks off with this one single startling question. As the world was just reeling from a sudden military operation, a handful of totally anonymous traders were cashing in big. How in the world did they know? Was it just incredible luck, brilliant analysis, or was it something else entirely? That's the mystery we're unpacking here.
All right, so let's start where these things often lead, the money. While governments were scrambling to react, a whole new kind of market was absolutely exploding with activity, essentially turning a global crisis into a golden financial opportunity, but only for a select few.
And the numbers, they're just staggering. I mean, look at this. We're talking about a total trading volume of over $500 million on just two platforms, Polymarket and Callsheet. These weren't just small side bets, This was a massive wave of capital gambling on the outcome of a war.
But here's where it gets really wild. An analysis from Bubble Maps SA found something pretty incredible. They saw that just 6 accounts, operating completely anonymously with only a digital wallet to their name, made roughly $1 million in profit. And they did it by correctly betting on February 28th, the exact day of the attack.
And you can probably guess what happened next. This immediately raised all sorts of red flags. As this Bloomberg report from right at the time points out, when you have that kind of pinpoint accuracy on a secret military operation, well, you have to start asking some very serious questions. The phrase insider trading started popping up everywhere.
Okay, so to really get why these bets were such a big deal, we need to understand the event they were all betting on. We're talking about a crisis that brought one of the world's most critical waterways to a grinding halt.
So the location is everything here, the Strait of Hormuz. Think of this narrow passage as the jugular vein of the entire global energy market. About a fifth, 20% of the world's daily oil supply moves right through here. So any disruption at all is absolutely guaranteed to have massive consequences.
And the escalation happened so fast. Blink and you'll miss it. On February 28th, the US and Israel launch Operation Epic Fury. It's a devastating strike, and it kills Iran's supreme leader. Just hours later, Iran's Revolutionary Guard Corps basically closes the strait. By March 1st, ships are being attacked, and then just a few days after that, the IRGC declares complete control. The strait was, for all intents and purposes, shut down.
And as you can imagine, closing that choke point sent immediate, powerful shockwaves through the entire global economy.
So the first and most obvious impact was on oil prices. Almost right away, Brent crude, which is the global benchmark, jumped by 10 to 13%. A spike that big in just the first few days of trading signals absolute panic in the energy markets. At its peak, the price shot up to $92 a barrel. And with the situation just getting worse, analysts were warning that if that strait stayed closed, we could easily see prices top $100 a barrel. And that's a threshold with really serious consequences for consumers all over the world.
But it wasn't just oil. Nope, the crisis hit natural gas just as hard. See, when Qatar, which is a huge LNG exporter in the region, was forced to halt production, European prices more than doubled. They soared from around 30 euros per megawatt hour to over 60. And beyond energy, the crisis just paralyzed global travel. With airspace suddenly closed over the Gulf states, there were over 4,000 flight cancellations per day. That stranded hundreds of thousands of people and brought regional hubs like Dubai to a complete standstill.
So with this whole backdrop of massive disruption and these incredibly profitable bets, the story takes another turn, and it leads to questions about financial connections in the highest spheres of power. We're just going to present the reported facts here, completely neutrally.
So first, it is really important to separate rumor from fact. A claim went absolutely viral on social media that Barron Trump had invested $30 million in oil just 2 days before the strikes. But, as this fact check from Dim Sum Daily points out, there is just no evidence to support that claim. His reported net worth comes from crypto and family business ventures, not oil speculation. Okay, so now let's look at what has been reported. According to sources like the New York Times and LiveMint, the president's eldest son, Donald Trump Jr., has direct links to the two main platforms at the center of this whole thing. He's reportedly an investor and an unpaid advisor to Polymarket and a paid advisor to Kalshi. It was also reported that back in 2025, both of these companies had regulatory cases against them dropped by the Commodity Futures Trading Commission.
Now, to ground all this in official records, we can look at public financial disclosures. What you're seeing here is an excerpt from the President's 2024 disclosure form. Now, while it doesn't detail every single connection, it's part of the public record, and that forms the basis for scrutiny and reporting on potential conflicts of interest.
And all of that brings us to the final and maybe the most important part of this whole story. You see, the questions that were raised by the 2026 crisis, they aren't isolated. They actually tap into a much larger, ongoing conversation about where political power and private profit intersect.
And these are not new concerns. This quote here is from Senator Jeff Merkley, but I want you to notice the date, December 2025. This was from a completely separate call for an investigation into stock trades made by Trump donors. It just goes to show that this kind of scrutiny has been a recurring theme for a while.
And that leaves us with this one final crucial question. When a global crisis can generate millions of dollars in profit on platforms that are advised by people with close proximity to power, well, it forces us all to ask, where do we draw the line between simply having information and having actual influence? It's a question that really goes to the very heart of transparency and trust.